Will London property drop? I am here in London. I'm actually in Mayfair looking at a penthouse apartment. You can see they made me wear these shoes. Don't want to get anything dirty. So this is a penthouse in Mayfair. I was here in London about 2 years ago. If you want to understand real estate, you have to understand property values, cycles, and trends. All real estate follows a trend, sometimes upward, sometimes bubbling. And my prediction 1 or 2 years ago in London is starting to happen now. Oil prices have... How do I open this? Voila. We'll come outside. It's got a little... I was just at a place that was badass. It was a 7-floor Chelsea house that had a pool in the basement indoor. This place has 7 floors. So now we're on the 4th floor. Okay, let's go up to the... This is Chelsea. That's the Thames River.
Hey, there's the Millennium.
There is the Eye, all the famous London area. This has never been lived in?
No, it hasn't, but there's no one in the
Wow. And there's the dining room, kitchen. This is the best room because it's got a library, it's got a skylight, and it's got a beautiful view of the, not sure what it is, but the Thames. So if you don't know Mayfair, this is over here is where the famous London Bridge is. But anyway, you know, whether you're looking for real estate here in London, I'm getting a second place. I have some places in the US, but I should say second country. I do a lot of business in Europe, so I'm gonna get a place here in London Central. But you don't want to overpay. And one of the things that causes people to overpay for real estate is not understanding trends and cycles. And so one of the ways you can catch trends in real estate is by understanding a simple ratio. The ratio is the price of the property versus the rental cash flow of the property. Now that's only one way to value property, but it's a pretty damn good one. And so there's places here that are selling for, you know, 10 or 20 million dollars that you can lease, or that are renting out for, I don't know, you know, 10, 20,000 a month, which means that the ratio is too wide. And so what you really want to look for in property is things where it's a narrow gap. Like you can rent it out for 4,000 a month, so that's a total of 50,000 a year, or 40,000 a year, but you could sell it for, you know, I mean, you could buy it for 200,000 or 300,000. Now you don't always find that. This is one of the bedrooms down here. Funny, everything's little in London. Got a mini-me bathroom, a bathtub. It's hard for me to find a place like I have in California, just because they don't have the space here in central London. But it's still nice. It's a little bit more like New York here in London. So when you're looking for property, you want a narrow gap between the rental income, even if you don't want to rent it out. This is nice. The bedroom has a little balcony. Even if you don't want to rent out your property, you should still look at the gap between what you bought it for, or what you could buy it for, and what you could generate in terms of income. All assets, all investments, whether they be stock investments in the you know, a publicly traded company, whether you're buying a business, whether you're buying a car, ultimately values of things are based off the cash flow they can generate. Never forget that. I was reading an interesting book for the book of the day yesterday. Make sure you follow my Snapchat. I post a lot of in-depth stuff there on Snapchat. It's just at Tai Lopez. But it was a book on how the folly of crowds, how crowds often all follow each other. Everybody starts buying, and then everyone buys and buys, and they inflate the price, and then the whole thing comes crashing down. That happened in 1987 in the stock market. That happened in 2001 with prices on internet stocks. That happened in 2008 in real estate. And guess what? It's probably going to happen in London, probably happen in the United States, in whatever country you live in. Whenever the masses start getting overly exuberant, things are about, usually, some exception, things are about to come crashing down. A pretty nice little penthouse, kind of like a house. What do you think? Should I stick with a house or get a cool place to live in London. That's more like, you know, a New York style place. I like London more than New York. I already got a place. I got a few places in the US, but I don't have anywhere in Europe. I'm gonna start with leasing. That way I can, one thing you wanna do before you buy, one of my mentors, Joel Salatin, said, lease for a year before you buy. Get to know the area. Would you agree with that as a real estate agent?
Absolutely, certainly one on the rental side.
Yeah. You're on the rental side, so you're biased. Yeah, but you rent before you buy, especially a new city. Well, we're gonna go look. Where are we going now, Maya?
We're going to Knightsbridge, back to
Knightsbridge. This is the posh side of town. Oh, I'm gonna go take. How do you look with your germ shoes?
Amazing.
There we go. Very, very catchy. I gave us a talk here in London. Now I'm headed to Sweden tomorrow. Then Norway. So how many people are on this floor? Not many, right?
Just
4. That's good. A lot of London real estate was overseas money coming in, buying it, high oil prices. People were making money in the Middle East, and then they wanted to park the money. What do they call that? That's coming up next month? The big decision in London over how the tax, whether in UK will stay in.
referendum.
Yeah.
Yeah, Brexit.
Brexit. So that's going to determine. You think that'll? What do you think the decisions will be that will positively or negatively affect London prices? Do you think if the UK leaves the EU, it'll get better or worse?
I think initially it will be slower.
What if they stay in the EU?
Again, I mean, I think it'll probably slow down fractionally, but I would have thought it would get back on track fairly quickly.
Yeah. Yeah. People get scared easily.
Exactly, just a bit of uncertainty, really.
There we go. It's got a nice lobby. It's near Oxford Street. There we go. And this street out here, one of the things, leave as a comment below. What's the ratio between where you live, the purchase price, versus what you would pay to buy it, or if you already own it?